Thanks for that introduction, Tim. So I'll just, oh, it's working great. Okay, so Canada Nickel, we're advancing the 100% owned Crawford Nickel project that's just outside of Timmins. A couple things I want to talk on. First is the nickel fundamentals. We think that the EV transition here is going to create a pretty significant demand for nickel towards the middle of 2025. Typically, you get pretty good super cycles. We saw one in the mid-2000s, 2005 timeline, and we believe that the 2025 timeline is going to start another one. A couple things that we've done at Crawford. Last year in May, we issued our PEA, and it confirmed a pretty robust project economics of 1.2 billion after-tax NPV, and it's 16% IRR. Then we've updated our mineral resource statement in the middle of this year. In May, we've pretty much doubled the resource, and we'll have about 1.3 to 1.8 million tons, billion tons of material that will go through the feasibility this year. We're looking to announce our feasibility results in Q4 of this year. There's going to be a number of improvements that we've seen, and we're well funded until 2023. A couple of things that's is an interesting feature of our asset is that it is low carbon emitting. We have developed a process in which we can actually generate credits for sale, and I'll get more into that later in the presentation. We've commenced our permitting process in in July of this year. We filed our initial project description, and that kicked off a 30-day public commenting period, and we expect to get our permits by 2025 to begin construction and first production by 2027. In addition to just Crawford, we actually have consolidated a number of land around the Crawford area. We believe that this is actually a district play, not just one Crawford mine, but we have a number of targets that we believe that can be multiple long life assets. And the team here, the key takeaway here is that this team here has permitted the Dumont project in the past. Our CEO is Mark Selby. He was previously at Dumont before founding Canada Nickel. He was an ex-Inco person that worked in the corporate development space. And the team here is essentially the same permitting team from Dumont. Just a quick look at our capital structure. Currently, we have about 22 million of cash available to us. We've drawn down a $10 million credit facility with Oramet, just to do some work around the winter period, post-feasibility. But we have 7 analysts covering us with an average target price around $4. And just quickly on the nickel market here, we've had this slide up for about 3 years now, forecasting a demand about 5.1 million tons of demand by 2030. Currently, last year, it was around 2.8 million tons of supply. If you believe any of the current estimates from the consensus market, as well as Vale, they're looking for a 6 million ton nickel demand. So you're essentially looking for about a double here. Sorry. You're looking for about a double in demand from now to 2030 just to meet the nickel market demands. And where's this nickel going to come from? When you look on the right side of this graph, lots of that comes from higher emitting laterite ore. Towards the left of that is the sulfide ores that are typically less carbon intensive. And within that complex, there is the serpentine ultramafics that I'll get into a little bit more, but it has a natural sequestering element to it. Can I go back a slide, please? Thank you. So this is Timmins. It's a very well-known mining district. That's our asset's about 30 minutes drive north of Timmins. Don't know why it's up. Here we are. And there's excellent infrastructure. About 80,000 people live in this town. Deep labor pool of talent. Newmont has their Hollinger mine right in the center of center of Timmins. The Cave Creek smelter, operated by Glencore, is still about 10 minutes away from our property. So excellent infrastructure, good power. It's hydropower, and it's low. Again, that's also low carbon emitting, and just a good source of labor talent as well. And last year, when we put out our PEA, it was 1.2 billion after-tax NPV. At peak nickel production, we'll be doing about 42,000 tons of nickel at a cash cost of about $1.09. All-in sustaining will be about $1.94, and it will be over a 25-year mine life. Oops. So if I can go back 2 slides. Actually, one after. Great, thank you. So what does that really mean for our cash cost? We'd be a first quartile cash cost producer within the sulfide operators around the world. And on a carbon basis, we'd also be a first quartile carbon producer, generating about 2.8 tons of CO2 per ton of nickel produced. And this does not include our tailings processing, which could potentially get us into the negatives of, and generate credits for sale. And we have about 3.5 million tons of M&I resources with an additional 1.5 million tons of inferred. 3.5 million tons of M&I gets us to be a top 5 sulfide operation developer globally. And at 42,000 tons per annum of nickel, we are a top 5 nickel sulfide production producer out there as well. And we would also be the largest base metals mine in Canada. So between the PEA and our feasibility that's due year-end, there's a couple of areas that we've improved. We talked about that resource expansion that we're growing from, that we've doubled over the year. So we'll have about 1.3 to 1.8 billion tons going through the mine plan. Recovery optimizations, we've done very little work in the past during the PEA, and we've done substantially more since that. We're seeing quite a bit more recovery improvements from there on. The net zero carbon footprint is something that we've worked on over the past year that we'll be able to generate credits for sale potentially. In the PEA, we didn't have any value for our cobalt and PGM credits. We've done lots more work around the drilling around that, and now we can potentially add that into the feasibility study. So around the recoveries, some areas, in our PEA, we had about 37% recoveries, is pretty low. And since then, some areas are showing about 62% recoveries. We're guiding towards about a 4 to 5% improvement from the feasibility to the feasibility. And every percentage of improvement on the recovery is about 92 million added to our NAV. And this is probably one of the key characteristics of our mine here, this our IPT carbon process. So when we pull out ore from the ground, it shows up as that black image to the right here. And over a course of a year, when you just let that sit in the ground, it forms a white magnesite. And what's happening is the CO2 molecule is being absorbed by the rock and naturally sequestering on its own. So when you let it just sit there passively, it follows that red curve towards that far table. And after about 200 days, you get to about carbon neutrality. Now, what we've done is we've crushed that rock, in the darker colored rock there. We've agitated it, and we've injected carbon directly into the process. And by treating that material, we get to carbon neutrality within 36 hours, and we can start generating credits after 6 days. So currently, we believe that we can get about 21 tons of credits per ton of ore produced. That roughly translates to about 710,000 tons of credits a year. I think BHP produced around 17 million tons of emissions last year. That'd be about 4 or 5% of their annual targets. So now, Crawford is the bottom right geophysics anomaly that you can see in this image here. We have a number of targets here. Reed is on the top right, and essentially when we flew our airborne, we identified a number of targets that look like Crawford with the same type of mineralization of that dunite prototype, and carries a very similar serpentine and that carbonization process that can have that sequestering trait to it. And we started drilling and testing the Reed deposit here, and you can see that Reed is actually larger than Crawford. And we've already drilled, we started drilling Reed, and we believe that we actually have multiple clusters of what could look like Crawford as we delineate the ore body a little bit more throughout the year going forward. And we've done, call it we've done 18 transactions to acquire about 13 additional targets. All of these targets that we've identified here have a bit of work done in the past, ranging from 1% to 2% nickel in some areas. But they all carry that, the hazelwoodite, aurorite, and prototype mineralization for largely most of our targets. So we believe that we have a complex here that can run for many, many years beyond our 25-year mine life. So going forward, what we have coming up for the rest of the year, we have, the key news flow item is going to be our feasibility study that's due year-end. You'll see some permitting updates. You'll see some updates towards our carbon processing, and potentially additional news flow around land acquisitions. That's it for my